All right, good morning, everyone. Welcome, or afternoon, or if you're watching the recording, hello. Welcome to the Monday Market Update in Mindset Call with Nikki, myself, and Cari. Today is March 17th. So, Nikki, let us know all we need to know for the week.
Absolutely. Well, happy St. Patrick's Day, everyone, and happy birthday, Lexi.
Thank you.
Okay, so we've got interesting week coming up. So the Fed meeting is happening this week. They'll conclude their meeting on Wednesday, and we should hear from Jerome Powell soon after that. We do not expect an interest rate cut. However, we do expect some information on the Summary of Economic Projections, or SEP. This is where the Fed relates notes that it has about what it feels like the economy is going to do here going forward, what they feel unemployment is going to do, and then how many rate cuts are they planning for the year. So we'll get information for that on Wednesday. From an interest rate standpoint, we saw a little bit of increase over last week, just due to some market uncertainty with things happening in the stock market. However, today already we're seeing some correction to that increase. So we should be back down into the mid to high sixes here pretty quickly, and being able to even go into the low sixes later this week, considering the notes that are going to be expected from the Fed meeting. So things are looking good. They're seeing, it's a little bit more volatility in the market from a day-to-day basis. However, we are seeing things, tend to pressure be put on those interest rates to keep them lower than what they have been in the last 3 months. So that's all good news. So today, an interesting topic. I've been dealing with this quite a bit over the last couple months, actually, and I kind of thought about it, and I didn't really think too much about it, but it popped into my mind this morning about addendums to the purchase agreement. So I will say there's a couple things. Number one, if we as a lender are asking you for an addendum to a purchase agreement, it is always for a very specific reason. We are asking that language be corrected to make it more mortgage friendly most of the time, or to clarify some information on the purchase agreement that might not have been clarified before. A good example of this is when you go through an inspection period on a purchase agreement for a client, and you have some work orders, you have some repairs, you have credits going back to the buyer as a result of these repairs, or changes in purchase price as a result of these repairs, or it results of the inspection, or for any other reason. The language that you use on the addendum is very important from a mortgage standpoint. If we have terms like seller credit, that is going to be considered to be a seller paid closing cost. Then at that point, if we are using the term seller credit, we are restricted to using that credit for closing costs and setup of escrow account and discount points, which means that we are restricted to that 3% rule, 6% rule, or 9% rule as far as how much the seller can contribute to the closing costs for the buyer. Keep in mind, if you are issuing a larger seller credit, that even if it falls within that 3, 6, or 9% range, we could possibly not be able to charge that much in closing costs in general, to take care of that. And so you have a risk of your buyer leaving money on the table. A good example of this, let's say the closing costs on a $300,000 mortgage are going to be about $7,000, and there's a $9,000 credit that gets issued. Number one, we are above our limit, and number two, we have to leave that $2,000 on the table, or try to buy that interest rate down in order to make sure that the buyer uses all those credits. Now, there comes a point where we as a lender can only allow the borrower to buy down an interest rate so far. And we have limits on our end on, high cost mortgage, what those points are, how much we can charge, and how much we can actually charge the client in fees overall. So we got to make sure that we're working together on that term seller credit. And most of the time, it might be more beneficial for all parties involved, including the seller, to reduce purchase price instead. I had a client who got an inspection where the roof, air conditioning, HVAC, and the stucco needed to be repaired, and it was to the tune of $80,000. And I got an addendum saying there was going to be an $80,000 credit. And I was like, there's no way I can use an $80,000 credit. So please keep that in mind when you're doing addendums. Also, if you are changing language, changing lenders, For a purchase agreement, we are going to require an addendum stating that you are aware of the lender change. This is something that has came up in the last couple weeks, honestly, to the last month, that lenders are starting to require knowledge that we are the new lender when we do come in on these rescue operations or when the client does change lenders. So keep that in mind. Always just be communicating to us before you even write an addendum. If there's any discussion, please contact me or your lender and talk about the language that needs to go in that addendum, especially if there's going to be repairs to the property or, things of that nature. We will have to check to make sure that those repairs are completed to the borrower's satisfaction and and that they're completed at all via a final inspection on the appraisal on our end. So just some things to keep in mind as you're writing these addendums, because it does get a little bit confusing, and I don't like having to go back and make you guys do rework again. And it's just better if we have the discussion up front. So just something to keep in mind as you're working through purchase agreements.
Yeah, and it's a really great reminder because I never was trained that way in the beginning to like go back to my lender again, have this conversation, have this relationship, even if you're the listing, not necessarily if you're the listing agent, but I, as a listing agent, would call Nikki and be like, this is what came in. How could this go? So, I mean, it can go all around, but especially if you're the buyer's agent, it's so yeah, and it's so important. And what I've seen happen too, and what happened recently is also what language you put on there. Like if you have the repairs or what was the one? I can't think of it right now, but like they don't want to see all that called out, like all the things that are going to happening, or if you're leaving stuff in the home for the buyer, it's just it can be an underwriting nightmare. So the cleaner you can keep it, the better. I learned that the hard way in the beginning because again, I wasn't really I learned on the go as I was, making the mistakes and quickly correcting them. And that was one of the things they're like, don't ever send me something like that again. I'm like, oh, sorry. They're like,
Yeah,
no, we just can't have that, or it's going to blow up everything. And I
yeah.
don't think that's talked about enough.
Right. And it's
Uh,
not in an effort to hide anything. It's in an effort to
no.
make the transaction as clean as possible. So a really
Yep.
good example of this is if you are going to have an inspection situation where it's resulting in a price reduction or a seller credit, a simple language would be the seller agrees to pay $2,000 towards buyer closing costs, inspection contingency is released,
Mhm.
and be done with it. Or if there
Don't need
are
all the
repairs,
details.
yep, if there are repairs that need to be made, in some cases, in some states, you are allowed to put that information on a separate addendum, or you're allowed to keep it out of the purchase agreement all over the place, completely, and you can do it via email. In the state of Arizona, unfortunately, that's not the case. And some states also have some regulations. You have to be very specific in your addendum language in Arizona. So just keep in mind, understand your state regulations and understand what is required to go on that purchase agreement as a result of inspection and as a result of repairs and work orders and things of that nature. Because anything that you put on that addendum that comes across our desk, we're going to have to verify has been completed before closing. And that may be okay with you. It may not be a big deal. But if things are going to be completed after closing, then we have, then we got to get into escrows. We've got to get into, that type of language. And sometimes from a purely mortgage standpoint, we want to keep this just as clean as possible and make sure that the buyer knows has a good understanding of what they're getting from, the seller in terms of work orders and things of that nature, but just making sure that that mortgage transaction is clean.
Yeah, words matter.
They do.
Absolutely. So, and when you had mentioned that, so, and I've seen this happen before. Can you talk a little bit about, let's say I write a purchase agreement and I put 10% 90, and then that changes to 5, or my buyer decides that instead of conventional, they're going to go FHA, like mid to end of the deal, like something
Right.
comes up and they have to quick switch it around.
Yep.
Do I need to amend that, or what does that look like for the holistic contract?
Yep. So the signal, if we go from a conventional to an FHA, for example, the signal that alerts the listing agent, the buyer's agent, and the sellers that we are going to an FHA mortgage is that FHA amendatory clause that needs to get signed. I, as a lender, am having that conversation with the buyer's agent first, saying, hey, here's what, obviously the buyer first after we have our discussions, but here's what changed. Here's why we're going FHA. I can talk, and then I reach out to the listing agent and say, hey, FYI, here's what happened. Here's why we're going. Here's, we don't need to worry about the appraisal for this manor, or we don't need to worry about the change in financing for this, and really talk about the solution that comes with that. And then that's when we get that amendatory clause. So that does not necessarily require an addendum to the purchase agreement to say, yes, we're aware that they're changing over to FHA financing. Changes in down payment also is a very good point. We don't need to necessarily do an addendum making the seller aware that the buyer is putting down 5%. It's really at the point where they can qualify at 10% down or qualify at what we put on the purchase agreement, as long as they have the ability to qualify for that. Any changes that they decide to make throughout the process are not required to be changed on the purchase agreement. So that's a really important aspect as well. Will that change in the future? Who knows? I very highly doubt it, but it could be something that's trending, kind of like this whole, if we're changing lenders, you have to let us know, type of situation, or it has to be documented that you know about it. Has came up that, the whole down payment stuff could come up, but regardless of that, it's just really being transparent too as a lender and making sure that you make the parties aware when there are important changes and things that affect it, because, these things, the effort is not to put doubt into the seller's mind. The effort is just to be transparent in what we're doing. So any major changes, yes, we will make people aware, but changes in down payment amounts, I can't imagine sending an email every time we change a loan amount due to one circumstance or another. You guys would be like, what are you doing? Why can't you get your loan amount right?
Right. Sometimes it's the less you know, the better, as long as it's moving forward. I only want to be called if I need, No, I
Exactly.
get
No
it.
news
That's
is good
great.
news.
Perfect. Absolutely. No, I just that came up, and I know that I had dealt with that in the past. And yeah, and that's why I love how you show up, Nikki. And I really appreciate having strong business partners, because I have, especially early on, or even when I thought I had it all figured out, agents on the other side are so convicted in their statements and how they show up and what needs to be done. And I'm just like, it almost makes me question myself, because they are so certain that it's this way, even though I'm like, but, so able to lean on Nikki, or able to have these people where I can just check myself, because I mean, come hell or high water, this agent is like, no, it has to be this way. How do you talk someone off that ledge? So it's just really important to understand that, because I've been in those situations before, and you want to put your kid gloves on and play nice in the sandbox, and yet help educate other agents
Yes.
too. So that's a lot of this. It's not only educating our buyers and sellers and other people, it's educating other agents, because I wasn't trained perfectly at the beginning, and I learned a lot along the way. And even when I was on my team lead had been in it for like 18, 20 years. In 3 times in 1 year, she looked at me and she's like, what are you doing? Like, where do you find this stuff? I don't know. I've never heard of it. What are you like? How do you find this stuff?
Yeah.
Because I come with the most random situations and things that
Yep.
people that have done hundreds of transactions have no idea. Yeah.
Yeah, and I think it's like keeping up with the changes too. I mean, things are constantly changing. When we think about, the overall from just a purely mortgage standpoint, when we take a loan, any loan in general, and we send it over to a servicer or we sell it off in the secondary market, between the time that we originate that loan to the time that it gets sold off, we're talking, usually 30 to 45 days. And you guys would be surprised at how often it comes back to us and says, oh, this has changed, this little bit has changed, you need to correct things here, etc. Because things are constantly changing from an investor perspective, and things are constantly changing from, how languages and how different guidelines are being interpreted, and new guidelines that are added in and clarifying information. And believe it or not, there's a lot of times where we're calling Fannie Mae or Freddie Mac directly and saying, okay, how do we need to handle this situation? And that getting guidance directly from them, so that we don't have, what we call buybacks on the secondary market. So keeping up with the market changes and keeping up with industry language changes is huge, because things aren't done the same way they were 20 years ago, and they certainly aren't done the same way they were 6 months ago. So it's just keeping that in mind and understanding that use your resources, use the people that, have surrounded you is use your trusted TikTok people and your trusted Instagram Reels people, and a lot of those really good, smart influencers that are in the business every day and do the work and have the success and understand they can get into the nitty gritty and really understand that language and understand what's trending and what's happening within the market.
I'll say it again, and I'll say it every time. Who you partner with matters. They're
Yes.
a direct reflection and extension of your business. Find good business partners. If you don't have them, find Nikki, or I can help you with this. I can help you with good business partners across the way. But lender wise, Nikki's it. So
Thank you.
thank you so much. Appreciate you.
Absolutely.
All right, everyone. Till next time, reach out to Nikki if you have any questions or myself, and we are here and happy to help and make it a good one.
Bye, everyone.